you can just wait for it and not see it live.
So, yeah, what about the cool thing to me with Bitcoin? The opportunity isn't so much Bitcoin, even though you think it's going to go to 500,000, and we'll talk about that. I think it's the whole ecosystem surrounding Bitcoin, like what you're doing at Morgan Creek Digital, the index funds that will be Bitcoin related once they're approved. I even see a big need for like custodial services. The average person, if we go to a Bitcoin world, your mother or your aunt, they're not going to be able to hold it themselves. So sort of like what Fidelity is doing with the Fidelity Digital Assets Council. I mean, I know a guy, he's like a Bitcoin millionaire. He said, I no longer want to hold my Bitcoin. So I, pay Fidelity to hold it for, 8 bips or something like that.
Yep.
I think the whole, and then I heard one time there was an excellent speech that I heard by, she's a friend of mine on LinkedIn. I have to pull her name. She's like the head of like the Wyoming Bitcoin banking system.
Caitlin Long.
What'd you say?
Caitlin Long.
Yes, she gave an amazing talk. We got to have her back on we got to have her on the show. But I think that whole ecosystem will be a great opportunity to invest. What do you think?
Yeah, look, I've spent the last 8 years going down the rabbit hole, and it took me a while to really catch on and finally start investing. But, look, this is an evolution of technology that is inevitable. We are moving to digital. So we started with analog, right? We had physical pieces of paper, stock certificates. We had physical pieces of paper, money. We would meet under the buttonwood tree, many, many years ago, and we would exchange. And then people said, carrying around pieces of paper is kind of risky, and you might get mugged on the way if you watch the movie Gangs in New York. And so they moved it inside and said, hey, maybe we should turn these pieces of paper into electronic form, and let's hold all the pieces of paper in Dallas, Texas, in a place called DTCC, and let's just trade QSIPs. So let's just have electronic transfer. But those QSIPs are just an electronic representation of the physical analog piece of paper. So we're using 400-year-old technology to trade stocks and bonds and currencies and commodities. And that's silly, right? We're moving to the digital age, where everything will be digital. Every stock, every bond, every currency, every commodity, every piece of real estate, every private business, every piece of art, every fine wine, everything will be digital. It will be, you'll be able to own it in fractional share. It will trade 24/7, right? No long weekends where the market's closed. It will be trading all the time because, again, our hours are not the world's hours. And, that to me is the great innovation. Your portfolio will be rebalanced automatically using algorithms. Imagine being able to own iconic pieces of real estate around the world, being able to own pieces of private businesses, not being shut out of the best deals because you're not an accredited investor. The SEC says if you're not smart, if you're not rich, you're not smart. That's just silly. Why are they say, we're protecting the little guy. No. It's a walled community keeping the little guy out. That's why I love SPACs so much. SPACs are a democratization of giving people access to private businesses that have been staying private and were basically only allowed to be invested in by accredited investors and qualified purchasers. So all of this is happening because of digitization. And Bitcoin is a piece of that. Ethereum is a piece of that. And to your point, the infrastructure around moving to digital is the biggest wealth creation opportunity I'll probably ever see in my lifetime. And I plan to be here a few more years. But it is so big. And it's because we're building on the technology before. So if you go back to the early days in the 50s, the mainframe computer, and there's this company called DEC, Digital Equipment Corp. And the president, 1974, said no one would ever have a need for a computer in their home. Why did he say that? Well, because he made big computers that sat in giant buildings at businesses. He said, personal computer's no threat to me. Well, here I am talking on a computer in my home to you live, on a Saturday. And what's amazing about that is that new technology, a personal computer, changed the world. But then it was personal computers weren't connected. And this thing called the internet came along in early 1990s. And I remember the clip from Katie Couric and Bryant Gumbel sitting on USA Today, or not USA Today, the Today Show, saying, "What is internet? What is that @ symbol?" And Paul Krugman famously said, "It'll never be more important than the fax machine." Might be more important than the fax machine. So again, here we are talking live in real time across video sharing using TCP/IP, Internet Protocol. Then you fast forward another 14 years to 2010 with the mobile net, and now we all walk around with mobile supercomputers in our hand. We call them phones. We actually don't talk on them anymore. But there are supercomputers. They're 100 times more powerful than the first computer that I bought from Michael Dell from his dorm room at University of Texas. I actually did that. I probably should have saved it as a collector's item. And today, we're moving into a new world driven by blockchain technology, where blockchain technology will be the operating system for the Internet of everything. Everything will be connected, and everything will be powered by micropayments using cryptocurrencies. It's an extraordinary thing, and it's building on the backs of Internet technology and this mobile telephony boom. And I look at it very simply, Josh. If you think about voice over IP, right, which we're using right now.
We're going to take a short break for the radio show, so we'll be back. We're live on YouTube with special guest Mark Yusko, talking Bitcoin, talking the Internet of Everything, Morgan Creek Digital Assets, and your questions at 800-321-0710. For the man who called this Bitcoin boom that we're sort of living in, even though Bitcoin's corrected from 60,000 to like 36, it had quite a run up this year. I think it was as low as, $3-4 grand all the way to 36,000 today is quite the evolution in the last year and couple months. So we'll be talking about Bitcoin. We'll talk about Money 2.0 when we return. 888-988-JOSH, 888-988-JOSH. If you want the free financial review, 888-988-JOSH. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jelinski.
Josh Jelinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jelinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Hi, everybody. We're back. This is Josh Jelinski, the Financial Quarterback, with Mark Yusko, talking the Internet of Everything. So how is it going to change things? Because where are we on this sort of the future of money thing? So look, Bitcoin went from sort of a laughing stock to respected. but how are we going to evolve further?
Yep. So look, money over internet protocol or value over internet protocol might be the most important invention of this century. And it's so critical because historically the internet, could move information, right? We went from physical encyclopedias to electronic and then now digital encyclopedias, Wikipedia. In fact, there's a great book about that called Wiki Management by Rod Collins, who I'll mention here in a second. And then media was completely disrupted, right? When you and I were growing up, we would run home to be in our chairs in front of our TV trays at 8 o'clock on Tuesday to watch Happy Days. And the big networks owned everything. They owned our eyeballs, they owned our time schedules, they owned all the advertising revenue, and they had massive market caps. Today, they've got small market caps. And who has all the market cap? Netflix. Well, how did they disrupt these financial behemoths, these media empires? Well, because they went to a new model. They went to subscription model and streaming. And, why didn't the big networks do that? They could have. Well, incumbents can't change. And so now we've got this new medium, right, which is money over internet protocol or value over internet protocol rather than information or digital images or streaming video. And what the internet did to media, the mobile net or the blockchain world is going to do to financial services. And in the old days, right, if I wanted to send you money, I had to have a bank account, you had to have a bank account, and the bank would charge me money, a fee to send it to you. And God forbid you were across an international border, and then I had to pay like 12% because the Rothschilds did a treaty 400 years ago that said every international transfer has to go through one of two banks of which they own. And that's really good for them, really bad for people who try to do remittances or send money home. And so the money world has basically been run by the banks for 700 years. In the old days, if I lent you money, I would write down in my book, my ledger, how much you owed me. And you had to trust me that I wrote down the right amount, right? What if I gave you $100 and I wrote down 200 and you came back to pay me the 100 and I said, no, you owe me 200. How would you prove differently? So then this monk in the 1200s came up with dual entry accounting, and the Medicis stole that idea and created a series of banks, and those banks became those middlemen. And basically, if I lent you $100, I would write down 100, you would write down 100. Now, what if one of us cheated and wrote down 200? We needed a middleman, a middle person to mediate, and that was what the banks did. So the banks have provided this trust for the trusted third party for all these centuries, 700 years. And Satoshi-san, whoever he, she, they are, came along in 2008 and said, wait a minute, I can do this with code. And think about this, right? We trust code more than we trust people now. Right? If you get lost, you don't stop and ask for directions. You look at Google Maps or Yahoo Maps or whatever. So that's the way we operate today in the digital age. And so money will operate the same way. And the blockchain technology is really simple. It's just triple entry accounting. So now, instead of me having to have a bank account, you having to have a bank account, and we pay a fee to transfer money. If I have a Bitcoin and I want to send it to you, the computer network, this global computer network, the most powerful computing network in the world, basically says three things. One, Mark has a Bitcoin. Two, he actually sent it to Josh. Three, Josh now has it. Once those three things, everybody gives a thumbs up, it's done. We don't have to pay anybody. We don't have to go through anybody. There doesn't have to be any KYC, AML, right? We control our assets and we unbank ourselves. And so this transformation of the financial services industry is going to be massive. And again, back to the topic we were talking about earlier, think about every asset in the world being digital, and you're having a portfolio, again, run by code, run by smart contracts, maybe running on Ethereum, maybe running on Polkadot, maybe running on some other infrastructure that is constantly scanning the world for the best opportunities and giving your portfolio a financial update like you do for your clients on an ongoing basis. So it's really an extraordinary time. And you think about how this technology will integrate into everything we do. And Rod Collins, back to Rod, he wrote this great book, Wiki Management, and he describes a world. Imagine you're in your autonomous vehicle, right? We won't drive. Driving will be something that our kids laugh at. And we'll be in our autonomous vehicle, sitting in the back. It'll pull into the charging station. It'll do a fast charge. It won't take hours. It'll take minutes. And you won't get out of the car and put a plastic card in the machine. Oh, ridiculous. No, the car will make a micropayment with cryptocurrency to the machine. You'll pull away, you'll get into the highway, and there'll be traffic. And you say, no, I don't want to sit in traffic. You won't get your license plate picture and have to send a check by mail to the toll road. The car will pay the fast lane. And then the cool part, and this is what I want to be Waze Select. So I want Waze to give me the fast route for an extra fee and send everybody else on the slow route. Now, that probably won't happen. I don't know. But all of these things rely on interconnectivity, so the Internet of Everything, on cryptocurrency to be the fuel or the power of these networks. And once the networks are established and once everything is digital, everything becomes seamless, and we get to spend less time thinking about and trying to manage and wondering what do we do on the weekend when the banks are closed and the markets are closed. Everything will just be seamless. It'll be pretty amazing.
So, but there's going to be a lot of friction between that point and today. So it's sort of like we're 20 years ago with the internet. So walk through with me, Aunt B or your mom or dad still living, mine have gone to be with the Lord.
Yep.
How are they going to get into this? Or our listeners who say this is all confusing? I mean, because when you go deep in the rabbit hole, you got these 24 keywords, and if you lose them, you lose your money. There's a lot to it. I don't want to get too technical. Maybe we should. It depends.
No. What you described is perfect. So digital assets are bearer assets, right? It's back to the future in the sense of money, right? Physical currency.
Yeah, they're like bearer bonds. If you lose them, you're done.
Yeah, if you lose your money, if you lose your bearer bonds, if you lose that physical stock certificate, it's bad. So what did we do? We set up systems, centralized systems, which is traditional finance. And traditional finance, right? DTCC and the banks and the brokerage firms all take care of the stuff that we don't want to do. Now let's talk about the banks, right? You put your money in the bank. Now what's interesting is as soon as you do that, it's no longer your money. It's the bank's money. And they're no, it's my money. No, it's not. It's the bank's money. Look on their balance sheet. It's theirs. You have an IOU. You and I have an IOU from the bank. Right? I have an IOU from Bank of America, but they own the money. Now, if they were to go bankrupt, I would have a claim. But if too many people had claims and they had blown up a bunch of the money through bad loans, look what happened in Cyprus a number of years ago. They lost 3/4 of their money. Look at the global financial crisis. People would have lost a lot of money had the government not bailed out the banks. Everybody says, oh, but I have FDIC insurance. Yep. As long as less than 3% of banks go under, you're good, because that's how much money they have in the FDIC kitty. So this idea that that system is good is just because that's what we accept, right? It's our custom. But there's a better system, and that better system is individual sovereignty, individual ownership of assets. But then you're like, oh, but wait, I don't want to know my seed phrase, and what if somebody comes to my house and holds me at gunpoint and says, give me your passcode? I don't want to deal with that. Well, exactly. So there will be centralized finance. There will be corporations that spring up. One just went public, Coinbase, right? They take care of digital assets for you. They're like a traditional finance company, like a bank, except they operate in digital assets. One of our biggest investments, one of our biggest winners is a company called BlockFi, okay? Blockchain Financial. What do? They're a bank. They take deposits of digital assets. they pay interest on those digital assets. And instead of making 0 to 1% in a traditional bank, I can make 6 to 10% interest on stable assets, basically cash. And why can they do that? Well, because there's so much demand to lend those assets, because that's what a bank does, right? A bank takes your money, lends that money to other people, and makes interest, pays you something to use the money, and keeps the spread. A traditional bank, pays 1%, lends at 3 to 4%, and makes a 2 to 3% spread. In the digital world today, you can lend at 15 and pay 6 and make 9. It's a beautiful business. So all they are is a centralized financial services company. And that's what Aunt B and Mom and Dad and everybody else is going to use as we transition, as you said, over the next 20 years to this individually sovereign world where, it'll get easier than having to memorize your seed phrase. And a seed phrase is simply
let's talk about that. We got to take another break. Folks, this is amazing. We have listeners calling in at 800-321-0710. One of my all-time favorite guests, Mark Yusko, who called the rise of Bitcoin years before it was cool. He was on here a year ago talking Bitcoin when it was, I don't know, how low was it, Mark? Like $4,000?
Well, it hit $5,000 last March. And I think the summertime when we were talking, it was back up to about $6,000-7,000.
Yes. And you called the rise of it then. And then we have many questions coming in. 800-321-0710. We're going to get to those. But first, folks, call us at 888-988-JOSH for the free Income for Life Blueprint. We will break it down how you can enjoy your retirement. Folks, if you are at retirement, nearing retirement, planning for retirement, if you want to maybe help with a Roth or insurance or investments, call us now, 888-988-JOSH, and we'll give you the Income for Life Blueprint, and I will throw in the very customizable protection, savings, and growth model for free. Call us now, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do if you're stuck at home under stay-at-home orders. Call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
Seed phrase thing. So to me, the appeal to Bitcoin as a financial guy is the decentralization of finance, and that you don't need banks. You don't need BlockFi. You don't need Gemini. You don't need Coinbase. To me, Coinbase, Gemini, they're all really cool. Don't get me wrong. And I think they will be necessary, sort of how Microsoft was necessary and, whatever, Priceline and Amazon before we go to this new round of the internet. You had like Internet 1.0, Internet 2.0, Coinbase, Gemini, BlockFi. Those sort of traditional outlets will be necessary as we convert to sort of the internet of money. But what I find pretty compelling too is the opportunities like a Strike app, where you can have the app, I can have an app, and we can displace, let's say, a Western Union, making them obsolete with our own Bitcoin that we control. So I think some invention will make this easy to control it in your own wallet. But so that we don't lose people here, I'll break it down simply. Both the online storage with a Coinbase or an offline where you hold it yourself with these seed phrases. People don't even know what seed phrases are, the average person. So if you could break that down, Mark, because you're so clear.
Yeah. So again, not to go too deep into the technical weeds, but at the end of the day, digital assets, right, exist in the digital world, and therefore you have to have a means for storing and retrieving them. And blockchain technology is really pretty simple, right? It's a ledger. And, we've had ledgers for thousands of years, right? We had papyrus and we had clay tablets, and then it went to the green ledger paper that we all grew up with accounting class. And then we went to spreadsheets, and today we have blockchain. And all blockchain is it basically takes in a digital form a series of transactions, and over a 10-minute period called a block, it takes all those transactions, writes them down on this digital ledger, and then appends that block to the chain of previous blocks every 10 minutes, secures that in an immutable fashion, meaning it can never change. It is a permanent record. And that system is secured by what are called miners. I mean, that's an unfortunate term because they actually don't dig stuff out of the ground. They don't wear little hats with lights. Mining is simply a data center, right? In the old days, you had a data center, right? You'd buy computers, you'd plug them in, you'd pay for the power, and then you had to go find customers like AWS or Azure or whatever, and they would rent your computers. That was a data center. The modern data center are miners. So you take the computers, you still buy computers, a different kind of computer, a GPU instead of a CPU, graphics processing unit. And that computer then you don't have to go find customers like Amazon or Microsoft. You basically rent your computing power to the network. And the network uses that computing power to secure this chain of blocks, this blockchain. So now we've got our record in the block that says Josh has a Bitcoin, Mark has a Bitcoin. Okay, great. Now, how do I know where it is? Well, I have to have a identifier, and that is this thing that we talk about as a seed phrase, right? That is a wallet, okay, like you would think of a wallet, but it's a digital wallet, meaning it exists in the digital form, and they are identifiable. And all of this goes back, and I don't get too technical, but all this goes back to cryptography. Crypto, right, as Charlie Munger said, I don't like anything that has the word crypt in it at my age. This has nothing to do with crypts. It has to do with cryptography.
Blood's in the crypts, yeah.
Yeah, it has to do with security. And so if we think about cryptography, there's something called a public key and a private key. And the public key is the address. It's a long string of letters. That is where your asset is stored on the blockchain. So that public key, right, is a string of 24 letters, and anyone can know that because even if you can go to that location on the chain, you can't get to it because you don't have the private key. The private key is secured by this seed phrase, and it's a series of 12 words, and those 12 words are unique to you or me. And when you match that private key with the public key, we can decrypt or we can reverse the cryptography, and we can see what we have secured on the blockchain. So that is a little bit complicated, and that's a process that the average person just doesn't want to deal with. So they're like, you know what? I'm going to let Coinbase or BlockFi or whoever, or Gemini, I'm going to let them be my custodian, the same way we might let Fidelity be our custodian in the electronic world. And there's nothing wrong with that. But there are people who say, nope, I don't want to pay a custodian. I want to deal with owning my assets. So I'm going to get a storage device. Now, that storage device could be your phone, right? You could put a wallet on your phone. Now, the problem with putting the wallet on your phone is your phone can be hacked and you could lose your digital assets. And the way to think about security in this world is the same way we think about money, right? How much money has been stolen from the Federal Reserve? $0. How about Bank of America's home office in New York? $0. How about Bank of America's El Paso, Texas branch? More than $0. How about people's wall safe? A lot more than $0. How about your purse or wallet? Lots and lots and lots, right? We lose or misplace money all the time. So the further you are from the source, the less secure it is. So how much money has been stolen from the Bitcoin blockchain? $0. Okay? Not one hack, never, not one fraudulent transaction. Is the most secure computing system in the history of the world. Never been breached, not even close, right? Visa gets breached just about every day. How many times you had to get a new Visa number because of fraud, because someone hacked into their system? Because in computing, you can either be fast or secure, never both. Visa, very, very fast, not really that secure. Blockchain, not very fast, but really, really secure. So we need this second layer system, as you described, something like Zap, of which we're also an investor. And what Jack has done is he's created a system on what's called the Lightning Network. And think of the Lightning Network the same way as Visa. Visa isn't a bank. Visa doesn't actually take my money except once a month, right? What do? They keep track on a spreadsheet. That's all it is a spreadsheet. They keep track on a spreadsheet of what I do during the month using that plastic card. And then once a month, they settle up with my bank. I make the payment to them. So the same thing with Zap is going to function on a second layer, not at the money layer, that is Bitcoin or Ethereum, but at a second layer, which allows people to move across these payment rails, assets that they own. So ultimately, we are recreating the traditional financial services world, banks, brokerage firms, money transfer agents, credit cards. All of that is going from electronic form to digital form. That's all it is. It's just an evolution of technology. It happens to be, I think, the biggest wealth creation opportunity I'll see in my lifetime, but it's simply a transition from an old system to new.
And I was hearing Caitlin Long, and to me, you know how traditional banking is going away from brick and mortar. I think in some regard, we will almost have like safety deposit. Old banking will be replaced by like old banking, where you'll go in, and if you're a little bit less technical, your bank will be like a physical place where they'll store, let's say, your cash ledger, or your cold wallet, or all these things. They might store your seed phrases physically for you,
yes,
so that they don't get stolen. So in some ways, it'll be actually more old school than the current state. What's your take on that?
No, it's a great point, right? In essence, we're going back to the future, right? In the old days, right, when money was first created, what was money, right? Money was a system of tokens that you and I would use to trade because it was inefficient for us to bring our goods to market. So I was a chicken farmer, you were a cow farmer, and it's really a hassle for me to bring all my chickens and you to bring all your cows to the market. So I would mint little tokens that had little chickens on them, and you would mint little tokens with little cows on them, and we would exchange those tokens, those coins. And so that's how we would trade. But then carrying around a sack of coins was kind of heavy. So we would put those coins in the bank, right? That's how banking began. And they would give us paper certificates. In the early days, it was invented in China in the 1300s. They called it flying money. Why? Well, because if you laid it down, unlike a coin, it would blow away in the wind. So you had to really take care of it. And we could trade those pieces of paper. But the problem is governments then got involved. And Thomas Jefferson has a great line about this from the 1700s. It says, if the people of America ever allow banks to control the issue of their currency, they will one day have all of their wealth stolen, first by inflation, then by deflation, until their children wind up penniless on the land their forefathers conquered. And that's exactly right. Once governments get involved and once governments issue money, see, the thing is, money exists without a liability.
And that's where we're headed, and we'll talk about that. Hold that thought. Hold that thought if you can, Mark. We have to take a short break, folks. Give us a call now, 888-988-JOSH, for the Protection, Savings, and Growth Blueprint. We'll go over asset protection strategies, tax saving strategies, and growth opportunities in these uncertain times. And you get the Income for Life Blueprint at no charge when you schedule and keep your no obligation review at 888-988-JOSH. We'll be back after these messages.
Josh Jelinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jelinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH. It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
We're back with Mark Yusko of Morgan Creek Digital Assets, who's become a little bit of a celebrity. How are you handling the celebrity status, Mark?
You are too kind. I certainly don't feel like a celebrity. Although I will say one of the things is I tell the story that my wife has only seen me speak once, and I was out at a conference in Vegas, and she happened to come. And long story short, at the end of the talk, she says, "You can't say things like that." Like what? She says, "You say things so forcefully." Like, well, what's wrong with that? She says, well, people will believe you. I'm like, well, that's kind of the idea. She says, well, what if you're wrong? I said, I'm wrong all the time. I just changed my mind. So I think part of it, Josh, is just simply, okay, if you're willing to speak your mind and you're willing to say things, then people will pay some attention. And also, it helps if you jump on a trend that is working, and then you get a little credit for being right. And look, I've been lucky. I get paid. My job is I get paid to talk to the smartest people in the world, right? That's my job. I go out and I talk to investment managers all over the world looking for investment ideas. And if I can't pick up something interesting, bad on me. And so I stumbled into this space in 2013. I had a good friend who shut down a big hedge fund, said he's spending the rest of his career focused on Bitcoin and infrastructure. This is 2013. At the time, I was too stupid to understand Bitcoin because I hadn't done any work. And, I joke I was not a cryptography student. I was not running drugs on Silk Road, so I didn't get it. But as soon as he said infrastructure, as soon as he said technology to build up the ecosystem of this internet of money, I was like, oh, I'm in.
And when did that click for you? Maybe, 3-4 years ago?
That was 2013. The infrastructure clicked in 2013. It took me 4 years to get comfortable with cryptocurrency itself because I hadn't done the work. And here's the thing. Everyone I know in anything that has been successful, whether it was the internet back in the 90s, whether it was the mobile net in 2010. Remember when Google bought Android in 2005? And there was a cover story saying, what are you doing? You guys are idiots. Now they have 80% market share of operating systems of mobile phones around the world. Apple's only 19%. Android is 80%. So, and there's 1% of other.
Yeah.
but people thought they were idiots. Or when Jeff Bezos, I can never know how you pronounce his name, richest man in the world, I don't know how to pronounce his name. But when he started AWS, there was a cover story in Business Week saying, hey, Jeff, go mine the store. And I talk about, it's actually my pinned tweet on Twitter. It says, the greatest wealth is created by investing in something that you believe in before others even understand. And it's axiomatically true. And the problem is you will be mocked and ridiculed, but it's worth it. And that was kind of what happened in 2017, is I finally had the aha moment, and I couldn't make this up, Josh. I was behind the wheel of an RV with my family in Eureka, California, and I literally had the Eureka moment where instead of thinking about this, instead of thinking about digital assets as some new thing, I realized it was just an evolution of technology. That literally this was just a continuation of this trend that started in 54.
So what year was this? 2017, 2018?
2017. Yep.
Okay.
2017. And it started with 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024, which is still a couple of years from now, a few years from now, with the trust net. So we're not even there yet, right? Everyone says, oh, what inning are we in? We're in the third inning, the fourth inning, the eighth inning. The Star-Spangled Banner just finished. We haven't even started the game. So this is a transformation of the way value is exchanged in the world. And once you have that aha moment, and once you do the work, but the point I was trying to make is all the smart people I know started really skeptical, right? We've heard Ray Dalio finally came around and admit, yeah, I own a little bit. And, Paul Tudor Jones said, oh, I hated it at first, and then I understood it, and then I bought some. Or Stan Druckenmiller. So really, really smart people started skeptical. And it's normal to start skeptical. But anyone who's done the work, anyone who goes down the rabbit hole, which you realize it's not a straight down hole. It actually goes out. It just gets bigger and bigger. And you realize that the smartest people on the planet are leaving real jobs to come into this space. It's the biggest migration of talent that I've seen other than the internet in the 90s, when people were leaving to go into the internet and their parents thought they were crazy. Funny, right before lockdown, I was up in New York and giving a speech at a big crypto conference, and gave a talk. And right after this young man comes up to me and says, hey, would you call my mom? I'm like, what? He says, well, you said that we were all smart for going into this industry and that this was a good idea. My mom thinks I'm an idiot. I left this law firm and went to work for this crypto firm. Said, yeah, I'll call your mom. And so we called his mom, and I said, nope, your son is really smart. This is a big deal. And it's like the movie The Graduate, right? But the word isn't plastics. The word is blockchain. The future is in blockchain, and it's just an operating system for the Internet of everything.
No, but yeah, fascinating. So what about all of the people who say, well, you have this system and it needs intermediaries, so won't it just become sort of obsolete? Meaning, we have a question on, you hear a lot of the Bitcoin FUD, as it's called. Jamie Dimon at JP Morgan on the YouTube, Steve writes, Janet Yellen and the feds want to regulate it. Is that possible or needed? To me, the regulation, the taxation, they're going to tax it. They're going to regulate it. It's fairly easy to do so. And that's precisely why I think it will be around for a long time. There will be...
Yeah, look, Josh, this is a great question. It's such an important question. And FUD, right, for everybody is fear, uncertainty, and doubt. And it's what incumbents do to foment fear, uncertainty, and doubt about new technology, about disruption. And right, for listeners up in New York area, okay, the average person doesn't know why the stoops in downtown New York are 9 feet above street level. Why would that be? That seems silly. Well, back in the time of horse-drawn carriages, the horse poop would get swept to the side of the street by the street sweepers, and it would pile up 4 or 5 feet. And the ladies didn't want their dresses to go through the horse poop, so they built the sidewalks 9 feet high, and you would walk into your house on this platform. Now, those platforms were kind of dangerous, especially at night if you were drinking, you fall down in the horse poop, so that was ugly. But that's why. And when the horseless carriage came out, what did the street sweepers do? They spread FUD, fear, uncertainty, and doubt. They hand out pamphlets saying that if you got in a horseless carriage, you would die, right? Because they didn't want to lose their jobs. Or when the airplane came out, the train companies passed out pamphlets and spread FUD that if you got in an airplane, your body would cave in on itself because you were going too fast, right? Because they didn't want to lose their jobs. Same thing's happening. Why does Jamie Dimon say it's a fraud? Why does Warren Buffett say it's like rat poison squared? Or Charlie Munger, his partner, one-upped him. He says, it's like trading in Bitcoin is like trading newly harvested dead baby brains. What the heck, Charlie? Seriously? Why would they say that? Because 46% of Berkshire Hathaway is financial services. And
it's the old system. And this is a fantastic hour. If you can stay on a little bit next hour, that'd be great. Folks, give us a call, 888-988-JOSH, and you get the free Income for Life blueprint. Check out Mark Yusko, Y-U-S-K-O. Google him. Go to Morgan Creek Digital. Follow him on morgancreekcap.com or at Mark Yusko on Twitter is his Twitter handle. So give us a call now, 888-988-JOSH, and get your free Income for Life blueprint. If you want access to asset protection strategies, tax savings opportunities, and growth opportunities for your money, call us now, 888-988-JOSH, 888-988-JOSH.
WOR and WAXQ HD2 New York, an iHeart radio station. Available everywhere on our free iHeartRadio app. Number 1 for music, radio, and podcasts. All in one.
A date which will live in infamy.
In Vietnam.
Military operations to disarm Iraq.
This Memorial Day,
We remember they gave their lives so that others might live.
we all remember 710 WOR, the voice of New York.
An iHeart radio station.
It is 47 degrees at 10 o'clock. Good morning. I'm Paul DeCastro. The millions of Americans hitting the roads this holiday weekend should expect some traffic delays and some steep gas prices. ABC's Elwyn Lopez has more from Atlanta.
A majority of travelers this weekend will be on the roads. More than 34 million people are expected to go by car, and this comes as gas prices hit a 7-year high. The national average now jumping to a little over $3 a gallon compared to $1.96 last year. Experts say that's in part because of demand. The other factor, that massive pipeline shutdown. Some of those gas stations still recovering weeks later, including here in Georgia.
And experts say if you are planning on driving this weekend, make sure to check fuel availability before you hit the road. The Bethpage Air Show at Jones Beach has been canceled today due to inclement weather. Ticket holders will receive 2 free park passes. There was a scary moment during Friday's dress rehearsal. It was so windy, a parachutist was blown off course and landed on Ellen Dunn of Merrick, who was sitting in the crowd.
I saw it coming, and I couldn't run away from it fast enough, and it came right on me. It was pretty scary.
Well, no decision has been made yet about tomorrow's performance. That decision is expected to be made early tomorrow. A TikTok video of a mouse enjoying some meat at Whole Foods is going viral. Brittany Ellis was shopping at the Columbus Circle location when she spotted movement in the butcher's case.
I pulled out my phone and I'm like, let me record this because this is 1 in a million. There's a mouse just relaxing there, eating lunch like nobody's business.
Well, Whole Foods said in the statement that they removed all products in the case, performed a deep cleaning, and brought in a third-party service for a thorough inspection. Meanwhile, the video of the munching mouse has more than 2 million views on TikTok. The 29-year-old woman from Maine who disappeared from Times Square Monday morning was found safe in Queens. Christine Hammondtree was found Friday in a hostel in Long Island City. Police said she was unharmed and no criminal activity was suspected. In sports, the Knicks lost to the Hawks. They trailed the first-round playoff series 2-1. The Nets falling to the Celtics. Brooklyn still leads that series 2-1. Baseball, the Yankees lost. The Mets and Braves were rained out.
Here's your WOR Weather Channel forecast. Get ready for windy, wet, and cool weather if you're going to be out and about this weekend. Rain will continue from this morning into the afternoon with a high only around 52 as winds gust in from the northeast at times. More rain tonight with a low of 48. Some periods of rain into Sunday with a high of 54. Rain tapers off towards Monday afternoon on Memorial Day with a high in the upper 60s. I'm meteorologist Jeff Marr.
Next news at 11. Start your day with Len Berman and Michael Riddle in the Morning, 6 till 10 weekdays. I'm Paul DeCastro on 710 WOR. We are an NBC News radio station.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jelinski. Josh is a noted financial advisor and president of the Jelinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jelinski.
Okay, we're back. This is Josh Jelinski, the Financial Quarterback, with one of my all-time favorite guests, MorganCreekCap.com. Mark, are you promoting anything now so that we can plug whatever you're promoting?
Not really. I mean, we're always selling, right? All of us are always selling. But, I spend most of my day now, Josh, around the blockchain ecosystem. We are launching our third venture capital fund. We've raised two funds, one in 2018, one in 2020, and we're raising our third venture capital fund. And then we do have a what's called a risk managed Bitcoin fund that kind of takes some of the volatility out. We have a digital asset index fund. We do some stuff in hedge funds and venture capital as well. But, all of that stuff, because of the SEC, is for accredited investors and qualified purchasers. The only thing we do that the average investor can participate is we do have a SPAC ETF, SPXZ, that is essentially trying to acquire what we call the companies of the future. And, those companies have been taking it on the chin here. But I say investing is the only thing I know when things go on sale, people run out of the store instead of buying what's on sale. So that's a long laundry list of what we're up to. And I can hang out for about another 10 minutes.
Yeah, we'll keep you for 10 and then we'll let you go. Basically, and folks, we're not recommending you buy or sell anything over the airwaves, but it's fun to envision the future. So you were right on Bitcoin. What else do you like? You mentioned SPACs, although they have certain risks. What else do you like right now? What do you believe are opportunities?
Yeah, look, I think the big thing now is that everyone needs to own some digital assets. I like Bitcoin, I like Ethereum, but you don't put all of your money there, right? You put 1%, 2%, 3% in those assets. And the great thing is they are asymmetric, meaning that the upside is bigger than the downside. And you don't buy it all at once. You dollar cost average in over time. I was on TV a couple of years ago and Bitcoin was $3,200 and Melissa Lee said, what do you think? I said, we should buy it. But it just went down from 6,000. I'm like, yeah, so you should buy some. And then you should buy some next week and the week after and the month after. And so here we are at, 34, 35,000 and it's up 10 times. Oh, I missed it. No, it's just getting warmed up. But you shouldn't buy it all today. You should buy some today and some next week and the week after and the week after. And just accumulate a position, kind of, let's say 1%, 3%, 5%. The younger you are, maybe the bigger that position, because the greater your time horizon. People say, oh, but the volatility. Volatility is our friend over the long term, right? We should seek volatile assets, which are uncorrelated with one another, and we should build a diversified portfolio. That's why people have, advisors like you, Josh, to help them do that, because buying volatile things is hard. But if you buy enough volatile assets, which are uncorrelated, you get a lower risk portfolio. Harry Markowitz won the Nobel Prize for this. And, it's like if you left all your money in cash, it's the worst possible thing you could do because you get chewed up by inflation. And with inflation rising, it happens even faster. If you put all your money in bonds, even worse. If interest rates rise, you could actually lose money like happened in the first quarter. But you can do something called SPAC arbitrage, where you buy the SPAC at the IPO and sell at the deal, and you make a very nice low double-digit return, better than bonds. You can buy hedged equities when equities are really, really high. There are ETFs like HDGE that allow you to be long and short. So there are opportunities in every market to build a diversified portfolio, to integrate other assets into that portfolio. We love emerging markets, right? We think that's where the growth is, particularly places like China. Oh, but what about all the Cold War rhetoric about China? Ignore it. That's fear, uncertainty, and doubt. That's FUD created by governments, right, in this case, to try to slow the growth. See, China and the U.S. 10 years ago had to decide, what do I want to be the best at? And America chose, for better or for worse, to be great at social media. And we are amazing at Instagram and Facebook and all the things that we do, Twitter. We're awesome. Well, China decided to be great at AI and 5G. And so they've got a huge lead in the digital age because those technologies are core and integral. So we want to try to slow them down. And so you're going to hear lots of bad things about China. But the reality is you should own some China, particularly some local shares. People are worried about inflation right now. Inflation is happening because of what's called the base effect, right? We locked down the world a year ago, very ill-advised. We locked down the world in response to a virus. We've been dealing with viruses for 2,000 years. This one's no different than any other virus we've ever dealt with. But we locked down the world and we disrupted everything. And now prices look like they're rising. They are. Well, what happened? We printed a lot of money. In fact, get this stat. The government created 40% of all the dollars that have ever existed in the history of the Republic in the last 12 months. Wow. Unbelievable. That's why assets in commodities, in cryptocurrencies, hard money assets, gold, silver, precious metals, all of those assets are getting higher in price. It doesn't mean they're getting better. It means the dollar is being devalued. And so that's the thing you want to protect against, is that devaluation of the currency. And that's happening all around the world because governments are highly indebted. And a highly indebted government has four choices. They can pay the debt back, they can restructure it, they can default on it, or they can inflate it away. Well, they can't pay it back because even if you taxed everybody 100%, they couldn't pay back the debt. They can't restructure it because they all have their own debt problems, so they can't accept lower payments for the debt. They can't default on it because then the politicians get kicked out and they don't like that. So they're going to inflate it away. So inflation is going to continue to be a challenge, and the way to combat that is to own a portion of your portfolio in assets that hedge against that risk. So build a diversified portfolio, find an advisor like Josh that you trust and that you know will build that diversified portfolio that embraces companies of the future, ideas of the future, and you'll be in good shape.
So you like emerging markets, crypto, of course, hedged equity. What else? Anything else?
I really like SPACs, SPAC originated companies. I like the future, right? I like to invest in the future. So I want to own autonomous vehicles. I want to own electrification of vehicles. I want to own innovation as an asset class. I want to own cryptocurrency. I want to own online gaming. If you would have told me a year ago that the guy telling people how to bet on the Kentucky Derby would get more airtime than the actual horses, I would have laughed at you. If you would have told me a year ago that people would be on ESPN telling us how to bet the over-under, I would have laughed. But it's real. So companies like DraftKings are going to do really, really well for years to come because online gaming is part of it. If you would have told me that esports, that more kids, or actually more people, not just kids, more people will watch esports this year than every other league except the NFL, more than baseball, more than hockey, more than basketball, I would have laughed, but it's true. So esports, online gaming, electrification of vehicles. How about space tourism? How many space tourists do we have today? That would be zero. How many will we have in the future? More than zero. It won't be me, Josh, but somebody's going to go do that. And
and they'll pay a lot of money to do it.
Are going to be, pardon?
And they'll pay a lot of money to do it.
They'll pay a lot of money to do it. So look, investing in innovation is always a good idea. Investing in the future, always a good idea. Diversifying your portfolio, always a good idea. Hedging against the big risks, inflation and deflation, really important.
Are you worried about deflation at all?
Pardon?
Are you worried about deflation at all?
I am. I actually think this inflation scare will be temporal and that we're going to go right back to deflation. Deflation is basically excessive government spending causes deflation because government spending crowds out private investment. And we are going to go back to deflation after this base effect of the lockdown depression goes away. I think we'll be right back to deflation. And I think things like long bonds will turn out to be a really nice investment later this year. But
so there's a traditional thing for you.
We're not going to Weimar Germany. It's a temporal or transitory thing. And that's one where the government's actually right on that.
And what do you do to combat that?
Well, in the short term, you want to own commodities. You want to own gold. You want to own cryptocurrencies as the monetary inflation happens. But over the time, the deflation, the way to protect yourself against that is with long duration treasuries. And those have been a great, and again, you don't need a lot. You need 1%, 2%, 3% in a portfolio to really hedge that particular risk. Look, technology is deflationary. QE is deflationary, and all of those things. Because look, we're in a place where every empire in the history of mankind has come, right? Where you get profligate spending at the government level, and eventually you have to devalue the currency so much that you have to hit reset. And the way to protect yourself against that is with high quality, long duration assets.
Wonderful. Well, thank you so much for joining us for this final segment. Mark Yusko, MorganCreekCap.com. Have fun at the Bitcoin conference. I'm sure it'll be fun.
All right, it's going to be crazy. So I look forward to getting together again, and we'll talk about the week in Miami.
Yes.
Right, take care, Josh.
Let's get together soon. Thanks. Mark Yusko, Morgan Creek Cap. And folks, we'll be taking your calls now, 800-321-0710. Very fun interview with Mark Yusko of Morgan Creek Cap. Folks, if you have questions, give us a call, 800-321-0710. Talking about government spending crowding out private investments. The New York Times reported this week that Biden's $6 trillion budget would take the U.S. to its highest sustained levels of federal spending since World War II. And we're not even in a war. The $6 trillion budget is predicted to swell to $8.2 trillion in total spending by 2031. We'll talk about the likelihood of higher taxes and what you can do to prepare yourself. But first, call us 888-988-JOSH for the Income for Life Blueprint. And I'll be answering your questions on YouTube. We have questions from Howard and Steve talking about Janet Yellen and the feds want to regulate Bitcoin. Is that possible or needed? And we'll be talking about, will firms accept Bitcoin payments for purchases if the Bitcoin price might fall precipitously soon after? When we return, this is Josh Jelinski, the financial quarterback. Don't touch that dial.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program, 888-988-JOSH.
Josh Jelinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jelinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH.
Okay, we're back. 800-321-0710. Taking your calls on all matters financial at 800-321-0710. Fewer retirees are claiming Social Security at 62, so the advice we've been giving to you has been paying off. The number one advice, let's say you're poor and have no money at 62, is to work a little longer and delay Social Security to 70. Because if you live longer, having that extra check will be like making 8% per annum. The percentage of Social Security recipients who file for benefits at the earliest age of 62 has been steadily declining for decades. That's a positive trend for American retirement security. So we'll talk about that. And we're taking all of your listener questions at 800-321-0710. If you earn less than 75 grand, you know you pay nothing in federal income taxes in 2021. This is a problem for society when people don't pay their fair share. Now, normally that's talking about the rich who pay 40, 50, 60% if you add up state and federal taxes. But do you know at least half of all taxpayers under 75 grand? So they don't pay any taxes federally. You might say, well, what about that money that comes out of my check? That's FICA tax, that's Medicare tax, that's Social Security. But we're talking federal income tax. According to CNBC, there's a chance you'll end up paying no income taxes on it. On average, taxpayers in that category will have no tax liability after accounting on deductions and credits when they file their 2021 tax returns next spring, according to recent estimates from the nonpartisan Joint Committee on Taxation. Those households also may get even money back from the IRS. Even for taxpayers earning 75 grand to 100 grand in 2021, the average income tax paid will be 1.8%. Here's a problem. You're then incentivizing malinvestment and really a nation to say, oh, I want this benefit. I want free college. I want this. You know what's going to happen? Rich people are going to not work, and then they're going to end up taxing people more and more. The main drivers for non-payers are the earned income tax credit for lower earners and the child tax credit for families with children after accounting for the standard deduction, said Garrett Watson, a senior policy analyst at the Tax Foundation. For 2021, the standard deduction for individual tax filers is $12,550. For married couples, it's $25,100. While having a zero tax bill is not a new phenomenon. Remember, Mitt Romney got flack for saying the nation is, he lost because we have a nation of takers, basically. Because once we cross that 50% of all Americans don't pay any taxes, okay, we have a problem. We're just going to vote perpetually for more benefits and higher taxes on the wealthy. But whatever, I don't want to get political. There are plenty of people in that income group that will owe taxes. Someone else said, someone named Mag from the Joint Committee on Taxation. Those are the averages for everyone. Additionally, owing nothing to the IRS on your income doesn't mean paying zero federal taxes. For example, if you earn, and we'll get into this next, but let's take your calls at 800-321-0710. It's an open phone line edition of the broadcast where we get to ask you any and every financial question for us right now. And folks, if you want to call us, now is the time to chime in. We got all your questions. I will go to the YouTube questionnaire line. You think the banks will let this happen? I'm sure they will get Congress's ear. I don't know. I think people don't understand Bitcoin, that it can be truly traceable with blockchain analysis. So the government will get huge sources of tax revenue. So Bitcoin is sort of populated by people who like cash, for people who have a distrust in the government. As they then show up their cash into Bitcoin, now you have money that was not before really taxed and traceable. in the economy. And in Bitcoin, there's this public key and the private. So they'll be able to detect who's evading taxes or not. So I don't think the banks will let this happen. I actually think the government will want this to happen because they'll be starved for tax revenue, and they'll do modeling, and they'll be able to regulate it. For example, I think the Russian collusion thing or whatever, they ended up finding the criminals behind that due to blockchain analysis. I don't know if you want to look that up, Ernesto. So folks, give us a call. Will firms accept Bitcoin? Sure. Now, what about the fact that it's very volatile in nature? And here's the thing. Bitcoin's risky. SPACs are risky. Everything has risks. So don't do anything just because you hear us on the radio or the YouTube, because we're mentioning a lot of people got in Bitcoin at 60,000. Now it's 34,000. Well, that's, kind of dumb. So, and like Mark said, if you're doing these emerging assets, have 1%, 2%, 3%. Don't put your whole nest egg in it. Try with a small amount first if you're wanting to get into that stuff. So folks, give us a call now, 800-321-0710. So this is interesting. The Department of Justice indicted the Russian hackers using Bitcoin blockchain analysis. This was from July 24th, 2018. And the U.S. Department of Justice indicted Russian hackers, described how 12 Russian intelligence operatives allegedly used a series of cyber attacks to interfere with the 2016 U.S. presidential election. Now, this was years ago, so their advances in blockchain analysis are way beyond even this. So, there'll be a whole series of cottage programmers and internet types who now will be able to detect, like they'll be going after tax cheats and, all types of things, utilizing blockchain analysis. Now, Bitcoin, it's interesting, it's plunging as we speak. It's down to 34,578. This from a high of just a month ago of 60-something thousand. I don't know about if it's on sale. I think anytime you have an emerging technology, it's extremely volatile. 38,000 could go to 23,000. So, the chart does not look really great. It looks like it just keeps plunging. But I think the technology is here to stay. It's sort of like when you had the internet 20 years ago, very volatile. You had the year 2000, the year 2001, and the year 2002, where the NASDAQ lost 90% of its wealth. So if you took 60,000, which was the Bitcoin high, and you take 90,000 off, you could have Bitcoin 6,000 again. People might say I'm crazy. What we did see last week and the week after is a lot of institutions were buying it in the dip. So maybe they create a bottom at around 30,000. We don't know. Time will tell. But that's why you dollar cost average into stuff if you want to do that. Gordon, on possible Bitcoin problems. Go ahead, Gordon.
Yes, Mr. Yusko really gave us a tidal wave of information in the last hour or so. I would have asked him, one question. I have two questions. One question would be, I'd like to know if any smart people that he talks to are putting significant percentage of their assets in Bitcoin, not just 1, 3, 5%, but 20, 25, 50% of their assets in Bitcoin. They've got their toes in the water, but are they confident enough to put a really significant amount of money into?
Well, I think most people in the high-end money space like him, hedge funds, they're allocating, 1 to 3% as a natural allocation for their millionaire and billionaire clients. So in a sense, they're using it as a digital gold. Yeah. And that's where a lot of these types will say, if Bitcoin replaces gold, or even if it's added as a part of risk tolerance or asset allocation, that's really why I think we didn't ask him this, but I think that's why I've heard that case from Scott Minerd of Guggenheim that Bitcoin will go to 400,000. I know Yusko has said 500,000 long term. I'm talking like, maybe 5 years, maybe 2, maybe 10, maybe 1, because these institutions will start flocking, and they're already flocking as a diversification play. So like Tesla added some money to Bitcoin, but then he said, he's against it. But, I don't really go by what Elon Musk says. What he said, Paul Tudor Jones, Stanley Druckenmiller. You have all these people who were very skeptical of Bitcoin. They're now embracing it. So all you need is, a 1 to 3% exposure by billionaires, and you start seeing maybe that's where we have a bottom at 30,000 then. I don't know. I mean, I know that the logic behind some of these people investing is they say the worldwide gold allocation is like, I think $12 trillion is the market cap of gold.
Mm-hmm.
So if Bitcoin just has that market cap, it'll be like 400,000 or 500,000. That's I think their logic.
Oh, that's very interesting.
So they're saying basically, if you have ETFs, you still can't buy an ETF or a fund. You buy these Bitcoin trusts, which hold them, but it's not really traditional financial. But once you can buy a fund and you don't have to worry about losing your key, and you can buy an index fund that's a Bitcoin index fund, and it generally tracks the price, and they hold it for you, and a Fidelity holds it for you, or a Vanguard holds it for you. That's also where they think will contribute to the price increase. But that being said, in stocks, the price of a stock is what the available information tells us. So one of the reasons why Bitcoin went to 60,000 is because people started to believe. So people started to understand, okay, I get how it's going to work now. So then if it comes off of that high, it could get cut in half very easily. It could get cut in half again.
Mm-hmm.
It's an emerging technology.
Yeah.
You have to think how did internet stocks do 20 years ago? They were extremely volatile. So I think the Internet of Money will definitely be here to stay, but it will be a wild ride in the process. So, folks, give us a call now, 800-321-0710. If you have another question for me, 800-321-0710. And call our office right now, 888-988-JOSH, and you get a one-page, simple, filled-out blueprint for your wealth. It is our very own customizable model where you will get a game board, a free game board for your wealth, where you get to see all your protection strategies, saving strategies, and growth strategies, along with cash flow and debt management laid out. Now, why is our game board so important? Many of you are playing chess without the board. You have financial chess pieces. You have a rook, you have a queen, you have a king, you have a 401k, you have some Bitcoin, but you have no strategy. Or if you do have a strategy, it's really like from 20 years ago. So you need to refresh it. You maybe need the Income for Life blueprint that we're also giving away. So it's a 2-for-1 special. You get your very own customizable wealth blueprint, our very own protection, savings, and growth model, and the Income for Life blueprint right now. 888-988-JOSH. 888-988-JOSH. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jelinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Okay, we're back. This is Josh Jelinski, the financial quarterback, taking your calls on all matters financial at 800-321-0710. 800-321-0710. If you want to ask us a question, now is the time to chime in. So we're going to give you ways to avoid capital gains taxes legally from thinkadvisor.com. With this prospect of higher capital gains under the Biden tax proposal, many of you want to look for ways to help yourself avoid higher taxes on stocks, inherited property, and other assets. We'll talk about that with your calls at 800-321-0710. We have room for a couple more questions this hour, so call us now. The economy is booming, but many financial firms do not believe it. We'll talk about that. But a lot of people are acting like there's a boom. They're buying houses. So I think people have FOMO right now. They think there's going to be inflation, so let's quick buy our house. And to get in the hot housing market, you may have to raise your credit score. So make sure you check your credit history. You are allowed one free credit report a year. Have you taken advantage of that? A lot of you have lousy credit, so give us a call, 888-988-JOSH, and we really help people with money, who have money to save, so we're not in the credit repair business, though there are people that exist. A lot of them are fraudulent, so, and some are very good. If you're a credit repair person, forgive me if I'm... But, I mean, people will go, Josh, how do I repair my credit? Very easily. You go to the annualcreditreport.com, you go to Experian.com, Equifax, TransUnion, and you get your reports. Then you look and see what are the negatives on your credit. And you can rehab. You send them letters. Say, I paid this off. Please remove it. Many of them, if you keep, messaging them or sending them letters, send them a letter, and some of them have online, they'll take it off. And they'll rehab your credit that way. There are experts. What do you want to do to rehab your credit? You want to lower your credit utilization rate. You want to pay your bills on time, get a credit builder loan, and become an authorized user on someone else's card. Those are some simple ways to up your credit. And there are people who help you with credit rehab as well. I think the ways to rehab your credit are relatively easy, though. A lot of people they keep spending, right? But there are some tricks, though. So, like, you never cancel your cards because it screws up your credit utilization rate. You keep your card open. You just cut up your card and you don't use it. That's why they say cut your cards, because you don't want to really get rid of the credit. Because let's say you had a credit card. So I have this long-term credit card I've had since I was, 21, 22, my first credit card. I've never canceled that because I don't want to screw up my credit. So that's a good one. So how do you minimize capital gains tax? The Biden tax proposal would raise long-term capital gains to 39.6% for those earning $1 million or more per year. When you add in the net investment income tax for high income taxpayers of 3.8, This raises the top tax rate to 43.4% federally plus state. Here are some ways you can avoid or reduce capital gains tax legally. Number one, donate appreciated securities to charity. So if you have stock that ran up, if you have Bitcoin that ran up, donate it to your favorite church, shul, or charity, and you get two key benefits. Number one, the market value of the securities on the date of the donation serves as the deduction. Second, there are no capital gains taxes associated with this donated asset. You could also consider a donor-advised fund. Donating appreciated assets to a donor-advised fund offers the same tax advantages to clients as a direct charitable donation. With a donor-advised fund, the donated assets are professionally managed, and you can make donations over time. So let's say you believe in tithing every year, 10% of your income. You can put some appreciated stock or whatever into the DAF, the donor-advised fund, and give 10% of your pay from that. Then you get some tax breaks while doing your gifts, your annual gifts to your shul or your church. Now you got Russell, who has a question. Go ahead, Russell. This is a good question.
Hi. With this whole thing with the Bitcoin cryptocurrency, I obviously didn't put any investment into the Bitcoin because I didn't understand it back then. Still understanding it now. But there's other cryptocurrencies that are out there, like the Ethereum and the Dogecoins, and I put a little bit in the Dogecoin. So what about those other? I don't know how you call them, the other currencies. How are they going to be?
Well, Dogecoin is
in
a
comparison
fraudulent.
to the Bitcoin.
Okay, number one, you want to invest in what you understand. And if you understand Dogecoin, do you understand how it works?
Still learning. I just don't have the correct terminology or how to explain it.
Your currency will devalue exponentially. So at least with Bitcoin, there is a framework. There's, so much history with it. It's decentralized. Dogecoin, it's rather centralized and rife for fraud, price manipulation, and mass, by the way, deflation of the value of your money. Your value will actually decline in value exponentially the longer you hold it. I'm not a big fan of Dogecoin at all. In fact, I'm not a fan of many other cryptos because I think they are centralized rather than decentralized. They don't have this track record of 12 years of not being hacked, things like that. So I'm very skeptical of other cryptocurrencies.
Is it because of the Bitcoin? Is it because of Bitcoin and Ethereum? They've just been out longer, as opposed to
no. There's a lot more to it. Meaning, many of the other, number one, a vast majority of these people who come up with the new coins, even the guy who invented Ethereum, he just gave away his Ethereum, and most of these people will sell their Ethereum and buy Bitcoin. Most of these people will sell their altcoins and buy Bitcoin. So they create a coin, and that's the other thing. It could be a very real problem because it's not decentralized but centralized, meaning that one person has an inordinate amount of power, where there's a tremendous amount of miners in the Bitcoin community, and it's very decentralized as opposed to centralized, which centralized means even there's like a Bitcoin Cash or something. That's not the same thing as Bitcoin. And that there's like one guy that controls like 50% of the share. That to me is not really a good place to put your money. Okay, Russell? Any other questions on that?
No, I appreciate it. Thank you.
Meaning, think of it this way. If it's decentralized, it could be on a million different servers. I don't know how many servers. So they're being tested. The community of programmers are making sure things are legitimate, whereas with some of these other cryptos, they're all, they could be on someone's lone server, has all this control. So, yeah, I would be very weary of the Doge. I'm even leery of the whole Ethereum. Ethereum's is the number 2 version, and Mark Cuban and other people like it. But to me, it's either there's going to be one cryptocurrency that people value and have trade, of which other things are based off of it, sort of like the Internet of Money, which I think Bitcoin will play that role, and the Lightning Network will be the way that people transact upon it. But I think a lot of these other things are kind of, not that you can't make money in it, but, maybe they go up really high and then they crash. So next up, Marie, possibility of a stock market crash. Go ahead, Marie.
Yes, good morning. First of all, I admire you, your knowledge, and I've learned a lot through your Saturday morning shows. So I'm concerned. I'm a 75-year-old woman. I have stock 60-40. I own a house. I'm on Social Security and a pension. And the stock market, I'm very concerned because that is where my portfolio is. I have a financial advisor that deals with a reputable company. So I'm thinking about, I just need a second opinion, because I'm going to call my guy during the week, if I should cash in everything and put it in a cash account and leave it there. And I know I'm going to lose a few $1,000s during the year because I get dividends between, I would say, $700 to $1,000 a month. And that's able to me to keep up my home and all my cost of living expenses. So my concern is the stock market. Should
Sure. Well, number one, call my office when we're done at 888-988-JOSH, 888-988-5674. We'll give you a free second opinion on your wealth. Okay, that's 888-988-JOSH. But let me give you some tips. Number one, don't just sell everything. I mean, I'm not recommending you buy or sell anything, but, I want to sell everything today. Sell it all. What are you going to do with the money? When are you going to buy back in? That's the hardest time. Number two, I think, yes, the traditional 60-40 portfolio that you have is dead and will not necessarily protect you from the next crash. I was analyzing 60-40 portfolios in light of the market crash that we had in March of 2020. The average 60-40 portfolio lost about 24%, where the overall market was down about 37% in its low point. I just looked at some random, I think, 2030 fund, which has about 60% stock, 40% bonds. Would a 24% loss spook you, Marie?
Loss, yeah. I already had a loss a few years ago. I got so upset. I was really upset, but now it came back.
So what I would look at is, think about it. It may come back. So let's diversify you. Maybe you allocate towards long-term treasuries for 40 or 50%. Maybe you have some gold. Maybe you have 20% stock instead of 60 or 25%. Don't throw the baby out with the bathwater. Maybe you just want to adjust your risk profile. Also, you got to think of, will the dollar be worth less? Now, the dollar won't be worthless. It will just be worth less over time. But assets, stocks, bonds, real estate, cash, gold, crypto, whatever, if you had a diversified portfolio, I don't think you're properly diversified. I think you just have probably the boring old 60% stock, 40% bond mix. And I would definitely rethink your asset allocation. Okay. I would also look at maybe adding some income programs. Like, so if you need $1,000 a month, maybe you allocate towards guaranteed income through the claims paying ability of underlying insurance company, so that you get that monthly nut covered by conservative stream, so that if you lose 24% or whatever, or 30% in the next downturn, it doesn't spook you out of the market because you're getting a paycheck for life. Does that make sense?
Yeah, I understand, because it's my dividends that I really like, because I have stock that gives me...
Yeah, so we would invest for income as well, but maybe more conservative income. maybe add some conservative income to your portfolio. So if you go all cash, you generally lose to inflation, but maybe you rethink your asset allocation because maybe 60-40 is too much in stocks. Does that make sense?
Yes. Now, what do you think the stock market? It was pretty good the last 2 weeks or so, up and down. But I did. It was to my advantage. So how does it look like now with this administration spending all this money? I get a little nervous.
Well, we have a lot of people concerned about government spending, political uncertainty as it surrounds their portfolio. And that's why we came up with a tactical strategy where we just don't buy and hold in the tactical. If we see that the risk reward is low, meaning that we could have a significant correction, we might move you to cash. We believe cash is an asset class. But then we might move you back in where you might be, a day late and $1 short on when a lot of people sold out in March and they still haven't bought back. Also, diversification. Maybe you add a percentage to a gold ETF. Maybe you add more into long-dated treasuries as a hedge against deflation in the stock market going down. So to me, give us a call, 888-988-JOSH, 888-988-5674, and we can help you. Any other questions on that?
No, thank you so much, and I love your program. It's between you and Joel Olsen. It's on Saturday morning.
Joel Osteen. Is that Joel Olsen or Joel Osteen, the preacher?
Osteen, the preacher. I met the preacher. Yeah. So anyway, thank you so much, and have a safe weekend. And you and your family should be blessed. God bless you all, because you do contribute so much to us.
Oh, thank you. You're a sweetheart, Marie, and I look forward to meeting you at 888-988-JOSH, you and any of our listeners, and you'll get the free book, Income for Life Blueprint, when you schedule and keep your no-obligation review. We'll be back after these messages.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jelinski.
Josh Jelinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jelinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jelinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do if you're stuck at home under stay-at-home orders. Call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today, and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jelinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
Okay, we're back taking final call at 800-321-0710. I want to finish my segment on what to do to minimize capital gains. Number 1, donate appreciated securities to charity. Number 2, this was something by the Trump plan that we really forget happened. The ability for you to invest in those opportunity zones. Some opportunity zones are in some really nice places. So look into that. And you can avoid capital gains taxes legally for up to 10 years or something. We can help you evaluate those opportunity zones. Got to be careful. Some of these people have opportunity zone funds, high embedded fees, but we could counsel you on that as well. Also use tax loss harvesting. Make sure to use TLH when appropriate. TLH stands for tax loss harvesting. It involves realizing tax losses on some holdings and using these tax losses to offset realized gains. This can be done in the course of your regular portfolio reviews with your financial advisor to determine if rebalancing is needed. We have a program that will do this for you. Call us at 888-988-JOSH if you want it. Also, some advisors will look at their clients' taxable incomes accounts to look for tax loss harvesting in the course of the year and bank those losses for use in offsetting future realized gains. Capital losses in excess of realized gains can be used to offset up to $3,000 of taxable income. Any remaining unused losses can be carried over for subsequent years. So I think there's something you lost $50,000 on, a stock, and you don't really believe in anymore. Sell it and hold those losses, and maybe if you have something that made a lot of money, offset the winner against the loser. And then we'll also talk about asset location. Asset location is about the types of investments held in various accounts, such as taxable accounts. So this is a big one. I'm going to ask you to call us at 888-988-JOSH if you want the tax location review. This is a major tip. Where do you hold certain things? So if you hold dividend-paying stock, it's best to hold that in an IRA. Because if you hold it outside of an IRA, you got to pay income tax on it every year. Where an IRA, you can defer it till you're 72. But let's say you own a growth stock that doesn't pay a dividend. Maybe that's better outside of an IRA. Like a company like Berkshire Hathaway, they don't pay dividends. This has always been something to consider in the course of financial planning. If the proposed higher capital gains taxes are enacted, this will become a massive issue. And we do know with all the government spending, benefits will probably be cut. So you need to save more. Taxes will probably go up. And then the value of the dollar will be worth less over time. That's why you don't just want to have everything in cash. Because what if the government wants to inflate? I mean, we know this. I mean, governments inflate the money supply because they don't want it. They it's like what happened with coronavirus. You know, we had a Republican president and we spent trillions just out of thin air when we really didn't need to. They said we did, so we all did. We ran in our homes. People still got coronavirus. Obviously, it took a toll, but, the economic toll might be our dollars are worth significantly less and more people live in poverty because they can't pay their basic bills and expenses. So be very smart about asset location. Conventional wisdom has been that assets with potentially large capital gains, such as stocks, be held in taxable accounts. So when you die, you get a step up in gains. And income-producing assets like bonds, annuities, might be held in retirement accounts. With the current long-term capital gains rates at preferential levels, these gains would be taxed at a lower rate than most clients' regular income tax rates. That may be changing with the new tax code. So keep it locked here and get a review to make sure your assets are held in the right bucket. I've seen people, they are totally screwed up on this. They put like bonds in a Roth or they have cash in Roth. Your high asset, taxable income producing things should be in Roth so that all that growth and all that income is tax free. Your lower growth, income producing stuff should be in your IRAs. And your higher growth, actually, all the people have all this cash. If you really want cash, it may be better to have that cash in your IRAs and retirement plans. So call us at 888-988-JOSH for the no obligation protection, savings, and growth review. It is your very own financial game board. You get the game board free when you schedule and keep your no obligation review. So just close your eyes for a second and imagine your financial life a little bit more organized, a little bit more scientific, a little bit more integrated, a little bit more rules.
30 seconds.
Where you're not worried about fear and greed. It's coordinated, optimized. Call us at 888-988-JOSH and you get your very own model, and we throw in the Income for Life blueprint at no charge when you schedule and keep your no obligation review. 888-988-JOSH. Happy anniversary to the love of my life, Bethy. I'm going to give her a big bouquet of peonies. I bought like massive amounts of peonies, so hopefully she likes it. She walked down the aisle with them, and I love you.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to affect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services offered through Wealth Quarterback LLC.
WOR and WAXQ HD2 New York, an iHeart radio station. Available everywhere on our free iHeartRadio app. Number 1 for music, radio, and podcasts. All in one.
A date which will live in infamy. In Vietnam.
Military operations to disarm Iraq.
This Memorial Day,
We remember they gave their lives so that others might live.
we all remember 710 WOR, the voice of New York.